Hi again, Mullenites. Hope you're all doing really well. So Friday was another rough day for Mullen Automotive as the stock continued its downward spiral, closing with a staggering 17% loss. This now marks the sixth consecutive day that Mullen's share price has remained below the critical $1 threshold, pushing the company further into dangerous territory with Nasdaq listing requirements. The situation grows increasingly dire for Mullen and its shareholders as they grapple with the looming threat of potential delisting. The market has been reacting harshly to the potential massive dilution that could come from the exercise of outstanding warrants. Mullen is facing the prospect of issuing up to 85 million new shares as a result of these warrants, adding to the already existing 24 million shares. This kind of dilution is nothing short of catastrophic for existing shareholders as it significantly diminishes the value of their holdings. To understand why this is happening, let's break down the scenario. So warrants are essentially options that allow investors to purchase shares of Mullen at a predetermined price, known as the exercise price. In Mullen's case, the exercise price for the initial set of warrants is around $6.07 per share. However, with the stock currently trading well below $1, these warrants are deeply out of the money, meaning that unless the stock price recovers significantly, investors are unlikely to exercise them. But here's where it gets a bit more complicated. If the stock price were to rise even slightly, there might be a rush to exercise these warrants before any further decline, which could flood the market with new shares and drive the price down even further. This scenario creates a vicious cycle of dilution and declining share price, making it increasingly difficult for the stock to recover. And I think this is actually what we saw at the start of Thursday's session upon Mullen's announcement of the $7.7 million sale. There was an exercising of a mass amount of warrants, and that's why we had that initial spike, warrants get cashed in, and then the price gets driven down. So what was otherwise a good news day ends up being a flat trading day, and then you see even further decline today. Just a possibility. Anyway, amidst all this, you might wonder why Mullen is still able to consider another reverse stock split after having done so many in recent months. 3 in the past 18 months to be precise, leading to a cumulative reverse split ratio of 1 for 22,500. Normally, such frequent and drastic reverse splits are a sign of a company in distress, trying desperately to keep its share price above the required minimum levels. Yet technically, Mullen is still allowed to execute another reverse split if necessary. There are no specific regulatory limits on the number of reverse stock splits a company can perform, although each split typically requires shareholder approval. The purpose of a reverse split is to reduce the number of shares outstanding while increasing the price per share, theoretically allowing the company to maintain its Nasdaq listing by pushing the share price above the $1 threshold. However, this tactic is often seen as a temporary fix as the underlying issues such as dilution from warrants, poor financial performance, or a lack of investor confidence remain unaddressed. Mullen's repeated use of reverse splits is a clear signal that the company is struggling to stay afloat. Each reverse split might provide a short-term boost in the share price, but without substantive improvements in the company's fundamentals, the stock tends to drift back down, as we've seen time and time again. The reality is that Mullen is running out of options. The potential for massive dilution through the exercise of warrants is hanging over the company like a dark cloud, and the stock price continues to slide, further eroding investor confidence, or what's left of it anyway. So another reverse split may buy Mullen some time, but it's not a sustainable solution. The company needs to address its core issues, boosting sales, improving financial stability, and restoring market confidence if it hopes to survive. For shareholders, the situation is grim, with the stock down 17% today and 6 days below the $1 point. The road ahead looks increasingly challenging. Mullen's future on the Nasdaq is in serious jeopardy, and unless the company can engineer a significant turnaround, the prospect of a delisting seems all too real, if not now, sometime in the future. Anyway, share your thoughts on Mullen Automotive in the comments below. Love hearing from you guys. I hope you're all doing really well and enjoying the weekend. Till next time, may the markets trade in your favor. Cheers.